Okay, quick update. It is Monday, February 25th, 2019. We're trading during the New York session here. We're going to start off with the euro dollar. And I have not really received a trade signal that I'm comfortable with just yet. So a few hours ago, there was this reversal pattern here. This is a 30-minute chart, by the way. So I'll switch to a 1 hour chart. You can see that solid 1 hour bearish candle, indicating that maybe it would drop a little bit lower, but here's resistance from last week. Uh, it's close, and often I talk about when I see ranges of consolidation like this that I would rather wait for price to approach resistance or support more significantly, meaning that it's there's no doubt in my mind that it's getting a lot closer to that resistance or support for possible reversal. So in a situation like this, if I'm not too sure, if it looks like it's close, but things don't line up, the indicators aren't really confirming a possible solid reversal. And what I mean by that is one that I can count on, where if I was to short this, I'd have to be taking a look at where the candle closed based on the time frame that I'm using. So whether it's a 30-minute or a 1 hour chart, the first thing that I would do is look at the candle. It closed there at 1.1344 approximately, 43. So my first thought is it likely to drop to the next psychological level that I would trade inside of a consolidation range like this? So 20 would have been the psychological level that it would have been my first target. And if it doesn't look like it has that kind of momentum and that ability to continue in the direction that I'm expecting to trade it into to that target, then I'm going to leave it alone. I have to leave it alone. And at that time, it just didn't look like it had that momentum and that capability of dropping. You can see today's fulcrum, the pivot point there. Sometimes it will provide a temporary support or resistance, but it also is sort of an indicator to take a look at, and it's not a trading strategy for me by by any means, but it's just a way to look at where price is relative to support or resistance. It's a visual clue when I'm scanning through the charts quickly and determining, should I be considering a sell, should I be considering a buy, whatever the case is. So at this point, I just don't see that there's that momentum for it to drop. Doesn't mean that it won't. It doesn't mean that in the next couple of hours I won't get a solid sell signal. I certainly am looking for it, or I'm looking for the possibility of a breakout where price would continue higher and trend higher based on, let's say, last week's high. That's what I'm doing here with this one. So I didn't sell it there with that candle a few hours ago, and I'm not comfortable selling it with these candles from just a couple of hours ago on the 1 hour time frame or the 30-minute chart. Now, a place where it really is more obvious is here on the pound dollar. So on the pound dollar, after the rollover, I'm sorry, after the start of the new week, there was the possibility of considering maybe an HL30. So if some of you are following along with my trading strategy in those videos, you'll notice that there's a particular strategy that I trade called the HL30 where I'm looking at the previous day's high and low. And I can do that on a Monday morning, right? When the market starts for trading the new week, very often, if there is a valid confirmed HL30, I'll trade it. But there has to be certain conditions. The first condition is there has to be some kind of a trending move the previous day. Well, we had that on Friday here. So that was okay. But we're trading, if I was to sell it, I would be trading against what I see taking place on the larger time frames, like the 4 hour and the daily. So even though I'm looking to trade an HL30 on the 30-minute time frame off of the previous day's high or low, I still need to step back, take a moment, and look at the overall trend direction on the 4 hour or the daily charts, primarily the daily charts. So if I was to sell it, I would be trading against what I saw on the daily time frame. And I did not. I just chose to avoid it. There was a couple of different HL30 patterns. There was one right here. There's one right here. These were, for the most part, valid signals. This one was based on the rules and the conditions for an HL30. But again, it was in the wrong direction, so I just left it alone. And you can see that if I would have sold it, it most likely would not have worked. So we're getting a lot more activity as the London session picks up and starts to move through, but the candles are covering a bigger distance. But overall, it's still not really moving that far. We've got a high here at 30.97 and then a low down there at 30.56. So it's a relatively tight range. We're talking about a 30, 40 pip, 45 pip range. that's not a whole lot. I mean, that might provide some people the opportunity to scalp. I don't really scalp. I need a solid trade signal before I get into it. But this is also pretty consistent with a typical Monday. And sometimes you'll hear me talk about that where I say it just looks like it's just a typical Monday. It's just not really moving very far. There might be some economic data, but it's not having an impact anywhere. It's not really moving anything. I mean, we don't get anything off the open. So it's just a matter of waiting it through. And again, I don't know that I can't cross it off the list that there's a possibility I would get a trade signal sometime during the New York trade session. It's possible. However, it's also possible that this could be a typical Monday. Things might go sideways, and I'll just have to wait until after the rollover to take a look at the charts. And then if things look like they're still moving sideways after the rollover and we go into Tuesday's trading session, the Asian session, then I would be looking at breakouts. So last week we talked about the same thing. I was looking at ranges of consolidation that were staying in place for quite a long time. I think it was about 2.5 days or so. And at that point, then I'm going to switch to the 1 hour time frame and look for a breakout or look for a pretty significant reversal, meaning that price looks like it's going to break out of that consolidation range, but then it flips around and goes the opposite direction, and it's really significant. You can see the divergence in the indicators. You can see specific candle patterns. Sometimes that takes place with economic data, and that would be the most reliable trade signal for me at that time. So I'm not sure that that won't happen today, but if it doesn't and things go sideways, just be prepared that I probably won't be opening any trades. It might be a typical Monday like that where things move pretty sideways, and then I'll just start looking for a new opportunity after the rollover. So I'll send the next update after the rollover today, end of day, leading into Tuesday's trading session for the Asian session.